Welcome to Yahoo Finance Live. It's February 14th. Happy Valentine's Day to everybody out there. I'm Shauna Smith along with Dave Briggs. Let's get you up to speed on this afternoon's market action because still a bit of a mixed picture. We got that slightly hotter than expected inflation print out this morning. That's putting some pressure on the Dow. We're looking at losses of just 83 points here. Nasdaq holding on to gains up just about 0.5%. You're looking at the S&P barely positive here. The market's really trying to figure out what exactly this inflation print will mean for the Fed, whether or not it means that the Fed is going to continue raising rates here, maybe higher than we had initially anticipated. Looking at the bond market, not much movement here. You're looking at the 10-year yield now to the upside, up just about 5 basis points. Some pressure in the crude markets, which we'll get to in just a bit here. But the SPR release announced from the Biden administration that's putting some pressure on the price of crude this afternoon, falling below $80 a barrel. Taking a look at the sector action that we are seeing this afternoon, certainly a mixed picture. You have consumer discretionary technology really leading today's momentum. On the flip side, consumer staples, real estate lagging behind. A couple of big earnings reports that we will be covering after the bell this afternoon. We have Airbnb and TripAdvisor, both of those expected to cross shortly after the close. I mean, you take a look at the travel sector more broadly, certainly looking at gains. You have Airbnb up just about 3% ahead of that report. Booking.com up just about 2%. Marriott, they were out with earnings earlier today. That's up just about 3% there. So lots of green on the screen when it comes to those travel names, Dave.
A little bit of red on this Valentine's Day.
A little bit.
So I have to ask you,
Yes.
Do you or don't you Valentine's Day?
What do you mean?
Do you participate?
Yeah,
52% of Americans do. Oh, for the kids.
Yeah, and
but
I get
not
my
with your
husband
husband.
a card. A card, yeah.
Okay.
Maybe I'll get flowers if I'm lucky. I haven't yet though. So
Do you
we'll see.
expect it?
No.
Okay, yeah, we don't play that game.
The bar is very low.
The National Retail Federation says we'll spend on average $192 a person, and I always think to myself,
we are far below that in our household.
we are zero.
Yeah.
Yeah, other than the kids.
Yeah,
I don't play
we
that
got to get
game.
the Valentine's Day for the class.
I get no credit if I bring home flowers on Valentine's Day, so why do it? All right. Let's get you up to speed on inflation. It picked up in the first month of the year. January's consumer price index showed a 0.5% increase in prices over the past month. Rising shelter and energy costs, a big reason why. Year-over-year CPI rose 6.4%. Economists had expected prices to climb 6.2% over the year. Core CPI, which strips out the more volatile food and energy prices, increased 0.4% monthly and 5.6% from a year ago. Forecast called for a 5.5% annual increase. Largely speaking, not an overwhelming reading in either direction. I've heard people make the case in either direction that this justifies that we are going to get to 2% and it justifies that we are not. So it's kind of an economic Rorschach test.
Yeah, certainly. And I think it's tough to really figure out that maybe that's why we're not seeing too much reaction in terms of the markets right now, that no overreaction to this report. The fact that it was slightly hotter than expected. I think some of us maybe were anticipating that we'd see declines across the board today. But as we enter the final hour of trading, it's only the Dow moving to the downside. Some improvement that we saw in terms of improvement. Good news for consumers in airfare prices, also used car prices.
Yep.
They declined, but certainly we were not as big of a decline as many were anticipating or hoping to see on the street.
But what does it tell you is coming? Because to me, it's just more evidence that they're going to need to do more, that they're going to have to keep it tighter longer, and that they're not, and I've said this 1,000 times, going to get anywhere near 2% in the near future. Not this year. Be surprised if it's early or the middle of next year before we even get to 2.5 or 3. That's just one man speaking. What are you seeing?
Yeah, I don't know. I think it's a little optimistic if you think we're going to get, I think, below that 3% number by year end when it comes to inflation. But some out there are saying that maybe we could see that. So maybe they will prove us wrong here, right? Speaking of one of those people that might be a little bit more optimistic about that inflation picture moving forward, we want to bring in Greg Adacco. He's EY's chief economist here. Greg, just first of all, your big takeaway from this print, what should we be really taking away in terms of the implications for the Fed down the road?
I think the number one implication of today's CPI report is that we are going to be on a bumpy road. This disinflationary path is not going to be smooth. There are going to be bumps along the way. Just like on the inflationary leg, there were bumps along the way. So yes, inflation was a little bit hotter than anticipated, but we're not seeing anything of concern in this report. There is still an indication that if you look at some of the core fundamentals in terms of inflation, we're still on this solid disinflationary path. And I wouldn't be surprised that before the end of the year, we'll be below 3% inflation by the end of this year.
below 3% by the end of this year. Is that where your target just was?
Yes, I think the headline CPI is likely to be below 3%, and core CPI is going to be very close to that, but may also be below 3% by the end of this year.
Okay, I see a bet coming. I don't think it's going to get below 3 by the end of the year, or even close to it. Shauna, what are the stakes? What are Greg and I betting?
Let's do dinner. Dinner?
Greg, are you game for dinner? Over under is 3 by the end of 23. I'm taking over.
We'll do that. We'll have dinner. I look forward to that.
I look forward to
Especially
my
on this
steak.
Valentine's Day, this would be a great thing to do.
I'm looking forward to that steak, buddy. So you talk about a bumpy road ahead. Are we talking about a drop in the S&P? Are we talking about massive job losses? Exactly what do you mean by a bumpy road ahead?
Well, I think on this CPI front, on the inflation front in general, every month is not going to be a downward month. We're going to see months where we see upward momentum in terms of energy prices, in terms of food prices, even in terms of some of the core components. We still have an environment in which shelter costs are rising very strongly. But if you look at the underlying details, even in today's report, half of the headline CPI print on a month-over-month basis was from energy. The other half was from shelter costs. These are not sticky factors. So I think that as we move forward and see further deceleration in consumer spending, that's going to put downward pressure on inflation. My fear right now is what the Fed has done in terms of focusing on extreme data dependence in an environment that is as volatile as what we're seeing, because it's subject to sudden pivots in market sentiment if the data flow does not match its forecast.
So, Greg, what does that mean just in terms of what we could potentially see? What do you think could be the fallout then from that?
Well, listen, we were very much surprised by the January employment report. I think everybody was. That helped essentially tighten financial conditions in the wake of that report. But since then, we haven't really seen any further evidence of much resilience in the economy. Let's wait to see what the next employment report will bring in February, as well as the next CPI report. We will get tomorrow's retail sales numbers, which are likely to be good. But let's remember that retail sales are nominal figures, so they're likely to be inflated by the strong CPI print that we just had. So let's keep in mind that what matters is not the amount of dollars that people are spending, because we know they're spending more given the high inflation environment, but how much goods and services they're really buying underneath those high prices.
Greg, you mentioned shelter up 0.7% month over month, 7.9% year over year. When do you think we see that number begin to come down?
I think the spring is really going to be key in terms of the translation for some of the movements that we've already seen in the real-time housing data. We've seen a significant correction in housing activity that has permeated through housing prices. I think the CPI indicators will start to indicate more of a softening from that. And if you get that leg of CPI inflation that starts to decline, perhaps with accelerating momentum in the spring and into the summer, that's where you could start to see some more rapid falling, more rapid cooling of inflation dynamics. And that's where you will be buying me a dinner before the end of the year.
There we go. We will see who's going to win this bet. Greg, let's talk about a little bit more about the consumer. We'll get the retail sales number out before the bell tomorrow, painting another picture just in terms of the strength that we are seeing there. Are you seeing any evidence of consumers trading down? And what does that indicate to you?
I think what we're in for is a K-shaped spending pattern going into the next few months. The people at the lower to median end of the income spectrum are constrained by high prices. And let's not forget, we focus as economists on inflation, but inflation is still an environment where prices are rising. A lot of people focus on price levels when they go to the grocery store, the restaurant, or wherever. And that is still going to be an environment in which we see these higher prices deterring consumers' ability to spend, and therefore forcing them to use more credit or dip into their savings to finance their outlays. The well-off families are likely to continue to be able to spend, albeit at a slower pace. But that's really the trajectory I expect for consumer spending over the next few months.
All right, Greg, I'm thinking Charlie Palmer Steakhouse, maybe Cut Steakhouse. I think that's Wolfgang Puck's, but we'll talk in a couple of months, sir. Good to see you.
That sounds great.
All right. Speaking of inflation, Coca-Cola announcing it plans to raise prices next year as part of its quarterly earnings report this morning. Also in that report, a look at what consumers are and are not buying from Coca-Cola. As you can see, shares down a bit. Coca-Cola Zero Sugar and coffee products leading sales gains for the quarter, with coffee up 11% and Coca-Cola Zero Sugar up 9%, Shauna.
Yeah, certainly. It looks like people might be prioritizing those lower calorie beverages if you take a look just in terms of the growth that we are seeing there. Also coffee. You always need coffee. I don't think it's a huge head scratcher why maybe the growth there.
COVID proof, everything proof.
It makes a lot of sense. All right, so let's take a look at what we did not see working here for Coca-Cola in that quarter. The popularity of some of their categories fell. You can see it on your screen. Juice, dairy, their plant-based division. Sales there falling about 7%. Tea sales there falling 9% in the fourth quarter compared to the levels that we saw a year ago during that same quarter. Despite these price increases, the fact that it is working on some products, not working on other products, CEO James Quincy, he didn't really say anything in terms of the fact that they won't be really easing those pricing pressures anytime soon. In fact, higher prices are pretty likely here, saying that we don't see the runway for those higher prices running out anytime soon. Wedbush making the argument that Coca-Cola, given the brand, they have the pricing power, they have the ability to do it. But we are seeing consumers pull back just a little bit, as evidenced in that juice category, and also what we saw there in some of their other categories.
But that's more based on sugar, I think, and not prices. There's not a lot of disinflationary news in many of these earnings reports. They did see some not great numbers in the sports drink category, and their CEO says they have to reset ourselves there. They bought Body Armor recently. Those sales were down, and they saw a slight uptick in Powerade, but only up 1% in that category. So what are they going to buy next? Coca-Cola has a couple categories out there, one being alcoholic beverages. Next month, we get Jack and Coke in a can and Zero Sugar Jack and Coke in a can. They're also going to enter an alcoholic Fresca with Constellation brands, an alcoholic Topo Chico with Molson. So they are all over this space. On the other hand, there's this Coca-Cola move associated with Rosalia, Grammy-winning Spanish artist. This is more of a lifestyle, not necessarily a flavor, but an experience for young people. QR codes linking you to songs. Which direction do you think will be more successful?
Well, you know, it's hard to argue against that can that we have on the screen right now. It looks like a heck of a lot of fun. I think it's very smart for Coca-Cola to make those partnerships with huge celebrities, clearly targeting that younger generation. But when it comes to the future of canned cocktails, we've talked time and time again on this program. Surveys had shown that Gen Z, a lot of them prefer the mixed drinks. They prefer those types of canned cocktails. I think it's a huge home run potentially for Coca-Cola getting into that division, getting into the alcohol business.
I have to agree with you there. And the alcoholic Frescas, I got to try that. Fresca's delicious.
That sounds very good. Sounds like a good spring summer drink.
12 months a year, but yes, in particular. Good call.
All right, well, we are just getting started here on Yahoo Finance Live. Coming up, the U.S. is going to sell even more oil from the Strategic Petroleum Reserve. We will tell you what that means for oil and gas prices. Then, love is in the air this Valentine's Day, but beware. There are some financial red flags you need to be looking out for. We will tell you what they are. An earnings season rolling on. Airbnb TripAdvisor reporting after the bell this afternoon. Don't go anywhere. Oil prices under pressure today, closing off just over 1% below $80 a barrel. Now the move lower coming after the Biden administration said that it is selling more crude from the Strategic Petroleum Reserve. This time, 26 million barrels of oil will be delivered to the market starting in April, fulfilling the budget directives mandated by Congress. Here with more on this, we want to bring in Bob Iaccino, Path Trading Partners co-founder and chief market strategist. Bob, it's great to see you here. So let's talk about what this means for the energy market, for the crude market in the longer term. Yes, we're seeing the pressure on prices today. How much more pressure maybe could we expect because of this?
Well, hey, Sean, it's good to see you again. It's likely a temporary bit of pressure. Most of the pressure has come to the upside lately. It's interesting because we actually had crude oil down about 1.3% on the open. It was a gap lower. There was weakness, definitely dependent on that story about more SPR releases coming up. But then as it kind of fed through the market that this was a pre-scheduled sale, of which there's more to come. There were only some temporarily suspended by Congress. The concern now becomes the level of the SPR. We've got about 372 million barrels in the SPR now. You take this 26 away, and you're only about 93.6 million barrels away from where the law halts sales for the SPR. And there's a lot of dominoes to fall when that happens, not the least of which being that Congress has mandated many different levels and the timing of sales to fill other budget holes, which kind of always happens when Congress starts mixing their messages here and mixing their assets and their liabilities. This is another case like that. President Biden asked for these to be suspended. In this particular political climate, after the midterms, not likely to happen. So it's going to put the president and the SPR specifically in the country in a pretty bad spot going forward.
Aren't there actual physical concerns when we start to get this low at the Strategic Petroleum Reserve? And what's the plan to refill it?
So the plan was to buy oil at $70 a barrel. We got there. We got below $69 a barrel. I'm sorry, $70 a barrel in that $69 range last October, but no trigger was pulled. Part of that might be because filling the SPR has very little to do with West Texas Intermediate crude. It's more of a heavy base crude oil. Remember, all crude is not made the same. So they need a heavier base crude, which is the type that our refineries are processing. Brent crude never got down there, as well as some of the necessary types of oil that we could have refilled with. There's physical issues as well. You fill those tanks with brine, and then you pump that brine out to refill it with oil. And there's only so much time they can be empty. There's only so much time crude oil can stay in those storage tanks, which has a lot to do with sort of the circular motion of the sales and the filling and the sales and the filling. The issue becomes, as you look forward, both Saudi Arabia and the UAE have talked about potential shortages of supply in 2024. We do have a record coming from the Permian Basin in March. Another 75,000 barrels a day is going to put us at a record for shale drilling. But again, that's not the type of oil that goes into the SPR. And that's why looking ahead, it causes more of a lift to prices than it does pressure on prices that we're seeing a little bit yesterday and also this morning.
So Bob, then what does that mean in terms of when we could expect to see those higher prices? And then when it comes to gas prices, certainly there's a lot of fear that we're heading back above $4 a gallon. Do you think we will break above that level?
Well, I do think that's why the stake is going to be bought by the economist. As opposed to the other way around. I think energy prices are going to be one of the areas that is not going to back off as easily as had previously been hoped. When you look at what's going on with the SPR now, they need to start filling it regardless of price. And I suspect they're going to start doing that quickly and soon, maybe before even the summer driving season begins again. And we're only in February, but that's the time when speculators and people start planning for that seasonal bump up of gasoline prices. It's coming in the next 6 weeks or so. So I suspect there'll be announcements of the filling of the SPR sometime in the next 2 to 3 weeks.
All right, gas prices up, 17 cents from a month ago. Bob Iaccino, good to see you, sir. Thank you.
Good to see you as well.
Coming up, Ford pumping the brakes on the production and shipment of its electric F-150 Lightning pickup. Find out why after the break. Shares of Silvergate Capital jumping today after Citadel Securities reported a 5.5% stake in the crypto-friendly bank, worth about $25 million based on Monday's closing price. For more, we got a Yahoo Finance's David Hollerith, who has got a glorious mustache. It's coming in well, brother. Looking good.
Thanks.
All right, we'll move on from the stash. Let's tell us the latest in crypto, buddy.
Yeah, so Citadel as well as Susquehanna Advisors have both increased their stakes in Silvergate Capital. And Susquehanna has a 7.5% stake as of today's filing, and Silvergate's stake is up to 5.5%. Now, Susquehanna would not respond to comment, but a Citadel spokesperson did point out that this filing came in a 13G form. And 13G forms are calculated based on options positions without counting short positions. So I'll just point out, as major market makers, both these firms, Citadel and Susquehanna, have to often purchase against the options market. So they have to sort of take both sides of the trade. Now, Silvergate shares are pretty beaten down. Last year, they fell by more than 88%, from $155. Now, they're $17 on the day. And in its fourth quarter earnings, Silvergate showed massive losses, and most of that comes from FTX, one of its major clients. The company had to suspend dividend payments. It also had to lay off 40% of its workforce. More recently, also, a group of senators have been calling for Silvergate to provide more clear answers about whether or not it knew the extent to which FTX was using customer funds. Alameda Research, the company that spent FTX customer funds, is also a Silvergate, or was also a Silvergate customer.
Yeah, certainly lots of outrage, lots of upset lawmakers on the Hill just about what has all played out in the crypto market over the last several months. Earlier today, the Senate Banking Committee did hold a hearing on that recent crypto crash. Lots of talk about regulation. What can you tell us just in terms of the big headlines that we heard?
Yeah, at a high level, I mean, I think that there's always going to be some disagreement, but we heard unanimously that from Senate that clearly after last year's collapse, something needs to be done to come up with a more cohesive framework to regulate cryptocurrencies. Now, the two big issues in question is whether or not there are disclosures that are necessary for investors and then also banks. And the Federal Reserve and other agencies have issued a joint statement on the matter, sort of warning about the risks. Now, one thing that was brought up during the hearing was, how detailed risks need to be, and ways to solve this could come down to anything from, one agency overseeing crypto, banking regulators providing better guidance. And even one idea proposed was self-regulation, so having the industry's major firms sort of regulate the market and self-report. Now, obviously, there's probably going to be some combination of all of that, but I think it's pretty clear that after in recent weeks so many enforcement actions, that it did sound like a tenor of what was said in the hearing was that something needed to be done that was more cohesive to prevent what had happened in 2022 to cryptocurrencies.
Well, we'll have to wait to see exactly what that looks like. David Hollerith, thanks so much. Well, Ford shares falling today off just about 1%. The move lower after the automaker said that it's halting production and shipments of its electric F-150 Lightning due to potential battery issue. Senior autos reporter Pras Subramanian has the details for us. Pras, what do we know about this potential issue?
Yeah, not welcome news here if you're a Ford fan or investor. They're confirming the fact that they had a production halt and shipment halt of the F-150 Lightning. They said last week that they saw a potential battery issue within a pre-inspection vehicle, and they decided to kind of just lay it, basically stop all production, figure out what's going on. They're saying that there haven't been any vehicles on the road that have been affected yet, so those are fine. They're not stopping dealers from selling any vehicles in the lot just quite yet, but they're still investing in the matter. And we're talking about their most high-profile EV to date, so any kind of stop is noteworthy. Any kind of troubles are noteworthy. And just last quarter, we saw CEO Jim Farley talking about how they had execution issues that marred performance, and anything extended here will be another execution issue that mars performance for
Is
them.
that what he was talking about? Because it was a rough quarter. Presumably he had a pretty good sense of this when he made that comment.
I'm not sure if it was around the same time as last week. Some point earnings were 10 days ago, maybe.
Yeah, it's pretty close.
Pretty close. You know, it's possible that he did say that there were some issues that they've come across with EV production. They're learning every day about this, about optimizing. So he may have known, I'm not sure, but they're definitely looking into it. And like I said, I mean, this is something they're trying to ramp. They want to do 600,000 EVs annual run rate by the end of this year, and this is something that's not going to help them do that.
Yeah, we need some more transparency on exactly what this issue was, and if you have one of those cars, how concerned are you? But to your point, no problems with cars on lots or on the road. All right, today's inflation numbers, we got some new information regarding new and used car prices, some good on the used front.
Yeah, you're seeing this sort of like divergence, right? New car prices going up, used car prices going down. Used car prices down 11% year over year. Another month over month decrease there. So what's going on here is I think it's just a long-term trend of where a lot of used car dealers bought a lot of cars, expensive cars at auction. Now they're trying to get rid of those cars. They have higher financing costs. They want to get rid of those, trying to sell those right now before they kind of take a bigger bath on them. But there might be some recovery in the spring. Typically, spring buying season is here. Tax refunds kind of fuel people wanting to buy new cars. So we saw a little uptick in wholesale auction car prices, used car prices. So maybe a slight recovery as they anticipate potential buying in the spring.
Get out there, buy a used car right now. Proust, good to see you.
Maybe get a deal on an F-150, a used F-150 Lightning.
There you go, buddy. I don't think there's
Now
many,
you're speaking
I don't
his
think there's many
language.
used Lightning pickups out there.
A quick
All right,
turnaround.
Proust, thank you. Let's take a look now at shares of Airbnb before we head to break. The stock up 3.5% ahead of the company releasing its fourth quarter earnings. Be sure to stick around for Yahoo Finance's After the Call with Brian Southey and Brad Smith at 5:30 Eastern, where they'll break down all the top headlines from Airbnb's earnings call.
Brian Sazia, Yahoo Finance here with Brad Smith, and we're getting ready for our latest After the Call. It is Airbnb.
It is indeed Airbnb, a great company that perhaps you've rented one or two homes from in the past.
Airbnb stock up 35% year to date, one of the hottest stocks in the entire market. Brad, I know we're going to be on this conference call. Everybody's excited about the numbers, but I'm excited to hear who founder Brian Chesky has been renting his very expensive San Francisco house to. He's been doing this for months. I haven't rented it yet, Brad. I haven't rented it.
I know you're a fan of glamping. That's why you haven't rented it just yet. I'm going to be looking to see where that demand is holding up among consumers right now.
After the Call, Yahoo Finance homepage and YouTube coming up.
It's time for Triple Play. 3 stocks that we're watching in the final half hour of trading. We have Nvidia, Comcast, and Under Armour. Kicking it off with Nvidia, Bank of America making the case that the company can lead the, quote, AI arms race. The firm says that the chip maker is well positioned to capitalize on growing interest in artificial intelligence and sees it as a catalyst for long-term growth in its very important data center division. The firm raising its price target on the chip maker to $255 a share, substantially higher from where it is today, about $25 higher there. Well, taking a look at the fact that it's not exactly going to be a smooth ride here for the company, given the recent gains that we've seen. But Bank of America warning that we could see some pullbacks, but they don't expect any of those downturns to be long-lived. They expect those to be very short-lived and a quick bounce back here. Ali, lots of talk, lots of hype about the AI space. We have heard it on a number of earnings calls this earnings season. Nvidia, at least to Bank of America's point of view, thinks that they are very, very well positioned in that space.
Yeah, and AI had already been a heavily invested area, but then certainly with the explosion of ChatGPT, it's just reinvigorated a lot of these conversations and a lot of these stocks. Bank of America also saying in that note that ChatGPT and those other types of services could boost NVIDIA's revenue by 25% annually through 2027, since those types of large language programming, they require a lot of computing. Therefore, the demand for chips, that's going to be through the roof. And it's certainly something to watch with this stock, considering shares are up about 60% year to date. One thing that I'm watching, though, is Comcast. Shares are trading relatively flat today after a new CNBC report claimed NBC Sports is preparing to make a bid to win back NBA broadcasting rights more than 2 decades after the network lost those rights to Disney and Turner Sports. And this is important because Disney and Warner Bros. Discovery, that owns Turner, they have not yet waived their exclusive negotiation windows, so no formal discussions are taking place at this time. But I think it's an interesting story to think about how these streaming services and how the onset of streaming has really upended a lot of these negotiations. And you wonder if the NBA, instead of just partnering with 1 or 2 media partners, maybe they could partner with 3 or 4. Will these platforms like that? Probably not, but you have to
much
wonder.
Of a choice.
They might not have a choice, and especially what we've seen with the NFL, Amazon, the YouTube deal. Everything's a little different than it was a decade ago.
It's been so long since the NBC had the NBA. Were you guys old enough to remember OJ? Like, we were watching the NBA finals when the OJ chase.
Well, it's been like 20
you
years.
Probably don't even recall this.
Yeah, it's been a long time.
I can't see this in particular because the streaming element of it. Peacock has what, 20 million subs? In comparison to WBD has access if TNT Turner re-ups, which we all assume they will because they are so deeply vested. It is ingrained in everything they do there. They have 95 million subs. I just think Amazon or Apple is a given here, Ali. One of them will be in on this. Not the entire package, but some portion of it. The NBA saw what happened with the NFL. They know that they can reach a younger demo. They know they can get a huge number from one of those. You have to figure they're in on it. And then somebody like a WBD. What's your best bet? Sorry to put you on the spot here.
I do agree that after we saw everything with YouTube and Google, and especially with all these legacy media giants pulling back a lot of their spending, Bob Iger on the last earnings call, he said, look, we love the NBA, we love ESPN, but we are going to be a lot more selective with the types of sports rights that we want to commit to. So that does make me think that some of these tech giants could be a little ahead in the race there in order to strike.
Yeah, it was interesting how people interpreted that one line by Iger, because he said that he has enjoyed having the NBA. Some people were saying, oh, they're all in. They're going to want to renew that exclusivity. Others saying, hey, maybe they'll relinquish that and we'll see more of these players come into this space.
How does Iger cut costs? And they're talking about 50 to 75 billion to get this deal. So it's going to be really a fascinating story to watch, but still April 24 to Allie's point. All right, focus on my feet now because my play is Under Armour. I'm not merely rocking red shoes because it's Valentine's Day. No, it's because the retailer Under Armour today opened a pop-up store on 5th Ave in New York City centered around these babies. They're called Slipstream. This is Under Armour's new $150 sneaker /slip. So what's the key here? The key is how the heel folds down. If you can see, the heel folds up and then folds right back down and it becomes a slide after you're done working out. Yeah, it is both a slide and a shoe. Founder Kevin Plank saying at a launch party last night, "We have not yet built our defining product, but this comes close." The sneakers also offer the BOA wheel tightening cable system that eliminates the need to tie laces. That appeals to the young kids. New CEO Stephanie Leinartz will start in less than 2 weeks. After 25 years at Marriott, she'll have her hands full. Shares are up 6% this year, down 37% over the last 12 months, and really flat today. I got to tell you, I put them on initially and was bothered by folding the heel down.
Okay.
But I wore them all day and forgot it was there, and so now it has become a really convenient. They're not aiming at 46-year-old dads. I think they're aiming at my teenage kids, who I think this will really appeal to.
That's what I was just going to say. I don't know if you're exactly the target demo. You were I was next to you. You were very, very skeptical when you first put it on. I think it makes a lot of sense, especially if you are targeting those teenagers. I remember when I was much younger, I would try to fit my foot into shoes all the time without having to reach down because I was simply lazy. So it makes a lot of sense. I think this could potentially be a hit for teens, for those in their early 20s. I don't know about that red color. I love it for Valentine's,
well, it's Valentine's Day.
I
man.
know. I like that you're rocking the red there, but I don't know. It's certainly not.
They've got white, yellow, black, and a pink version.
I would try it. What do you think?
Well.
I think teens, yes, I agree. One, if you're working out in that and then sliding it in, doesn't the shoe get smelly? I mean, I don't know.
They're washable.
They're washable?
They are machine washable.
Okay, all right. You know, I could
they do get
see
smelly.
Yes, I was going to say, because I know my sneakers, I have very specific sneakers for each thing that I do. But I do think the teens will probably gravitate towards these.
Very, very comfortable. All right, Allie, thank you for playing.
All right, well, coming up next, Palantir shares jumping today after the company posted its first ever quarterly profit, despite beating estimates on the top and bottom line. Our next guest isn't so bullish on this stock. Will tell us why next.
Palantir shares surging today, up more than 20% after reporting better than expected fiscal fourth quarter earnings. The company saying it's on track for its first profitable year ever. But our next guest is not so convinced. Let's bring in Tyler Radke, Citi Senior Equity Research Analyst and co-head of U.S. Software. Tyler, you're not convinced here. Why not?
Yeah, good afternoon. Thanks for having me. So clearly, as you pointed out, the stock is up a lot today. I think this was still a challenging quarter for Palantir. Yes, to your point, there are a lot of headlines focusing on their first quarter of GAAP profitability. But ultimately, this is a growth stock. This trades at one of the highest revenue multiples in our coverage. This is a company that was guiding to 30% long-term growth only a few short quarters ago, and is now projected to grow half of that over the next coming year. And if you really look at the profitability, the only reason they got to be GAAP profitable in the quarter was because of some accounting treatments as it related to one of their Japan joint ventures where they recorded a gain on. So if you X that out, it actually wasn't a profitable quarter. And for the full year, we think they'll be barely profitable on a GAAP basis, and still a pretty expensive stock given the valuation multiple.
Tyler, some of the gains today are being attributed to comments that we heard from CEO Alex Karp on the earnings call. He was talking about an acquisition, saying, quote, "I think there's going to be a lot of interest in us in buying our software and potentially in buying us." As someone who covers the stock, what do you make of those comments and the fact maybe there could be a potential sale on the table?
Yeah, it was interesting comments to your point. I think it's hard for me as somebody that looks at the software sector holistically, who the logical buyers are, right? Palantir, this is a big company. We're talking multiple billions of dollars of revenue and a high valuation. And so, we'd be looking at a $20 billion plus check to write. There's only a handful of software companies that could afford that. I also think you have to think about Palantir and their value in being an independent party, right? They have 60% of their revenue tied to government contracts. And I think the governments value that independence. And so for this to fit under a large cap tech vendor, there's risk around losing talent, losing some of those contracts. It's perhaps a possibility that a large defense company could have some interest, but I think from a technology perspective, it's really hard for us to see who would fit the bill to acquire this, just given the risks involved.
Yeah, seemed eager to float that, didn't Alex Karp? Also said something interesting. I think for the first time, people have seen the impact of digitization of warfare and Palantir's central role in the world. What do you make of that comment? And just the rise in shares, what are investors missing?
Yeah. So look, I think Palantir has a very strong value proposition with the U.S. government, the armed forces. I mean, there's no question they're delivering a lot of value on the front lines, and it's something we really respect about what is a good company. I think our issue is just more the valuation ascribed to that. You look at the way that defense contractors are valued; they're on a multiple of earnings, a multiple of EBITDA, right? We talked about Palantir's profitable quarter; it was 1 cent of GAAP earnings, right? So clearly the stock is being valued on a much higher forward projection. I think overall, look, this is a company that we think can continue to have a lot of success in the government, but I think those growth rates are going to be at a much more modest growth rates than investors are expecting. And to answer your question around the stock reaction today, it's been an interesting start to the year for the software sector. Many of the names that heavily underperformed last year are up 30-40% year to date in only a month and a half. It's a squeezy tape out there, especially with optimism around rates coming down. So we think the M&A news and just that this was a stock that was heavily shorted is driving some short squeeze on the shares today.
So Tyler, then is it fair to say that you expect revenue sales here to remain volatile over the coming quarters, given some of the challenges that you have laid out, given the fact that the economic backdrop right now has certainly been uncertain at most?
Yeah, and that's the thing we're most concerned about. I think this was the 6th quarter in a row where we had to cut our numbers and kind of lower our forward projections. And so I don't really see any signs of that improving. Again, if you look at the quarter from a bookings perspective, bookings were down 70-80%. Even if you back out the SPAC related contracts, they were still down. Billings only grew 7%. So all these leading indicators that you typically evaluate to assess where revenue will grow over the next 12 months really looked concerning, and more concerning than the last quarter. So we do think it's going to be volatile. And ultimately, we're concerned that just the growth and margin expansion you see at this company over the next year could disappoint.
Fresh take there from Tyler Radke. Appreciate that. All right, coming up, Ted Lasso fans can get their first glimpse into the show's third season. Find out when AFC Richmond will return to the pitch and why it took so long. Next.
Apple TV releasing a teaser for the third season of Ted Lasso today. Here's a quick peek.
And I still believe.
Well, if seeing is believing, I believe we've been seen.
There we go. Lots of fans have been waiting quite some time for that. The third season of Ted Lasso starts streaming on Apple TV Plus on March 15th, just about a month away. Yahoo Finance's Ali Canal is here with us. Ali, lots of people are excited. The person to the right of me is very excited for this. What can we expect?
Oh, yes. And I've had multiple people over the past year and a half come up to me and say, do you know when Ted Lasso?
17 months,
I know.
man.
October 2021 was when we last saw this show. And finally, it is back. It's going to be released on Wednesday, March 15th, as you said. First 3 episodes available on that premiere day. And then will be released once a week on Wednesdays this time. The last time we saw this show, they released it on Fridays. So it's the first Apple TV series to premiere and debut midweek. But, you know, it's just one of those shows that it's adored by fans. It's adored by critics. It won multiple Emmys for Best Comedy, Best Actor, Best Supporting Actor, Best Supporting Actress. So I think fans are just excited to finally see this show return. But Shauna, as you and I were talking about, sometimes it takes too long for these shows, especially with the binge model. You binge it all, and then all of a sudden you don't get a new season for 2 years, and you forget everything that happened in the seasons prior. So I'm on YouTube trying to look up the synopsis of what happened the past 2 seasons. And I do think that's sort of risky, and you could lose some viewers that way.
With the Shrinking show, this will be my 2 favorite shows on TV, both on Apple TV, because Shrinking and Ted Lasso, terrific. They are out of the gate. Speaking of Apple, they had the halftime show. We have some fresh numbers from the Super Bowl and the Apple Music halftime show. How many tuned in?
So for the Super Bowl, and I unfortunately am an Eagles fan, so I watched the whole game, loved the whole game up until the very last minute, but I was not alone. 113 million folks tuned in to watch this game, the third biggest TV program of all time behind the 2017 and 2015 Super Bowls. But it really was that halftime show with Rihanna that gathered the most viewers. Nearly 119 million people tuned in to watch this, the second highest rated halftime show, right behind Katy Perry. I'm curious to hear your guys' thoughts on what you thought of Rihanna and her performance.
So I liked it. I love a lot of her songs. I thought it met some of the hype out there. To be honest, I didn't love it. It was far from my favorite halftime show.
I'm so relieved to hear you say that because Rihanna fans will come for you, man.
Oh, I know.
And they already have. There's already TikTok saying she's pregnant, this and that, and it's
certainly drummed up a lot.
She was pregnant. That's what I saw.
Amazing.
It was a very average performance. I was very obvious she was lip syncing everything. I don't know. I was not moved by it, other than the fact that she plugged her company. I thought it was just okay.
Yeah, and I read a headline saying that instead of chaos, she chose to be very sleek and simple in some ways. I can respect that because I do think the halftime show has become this spectacle, but I was disappointed that there were no guest performers. It's like one of the things.
Yes, there was. It was her unborn child.
If you count her unborn child. But I mean, she has so many great performers that have been featured on her songs. I was expecting that. I was expecting a little bit more. And again, like you said, Dave, I know people are going to come for me for that because they are very protective, and I love Rihanna. Don't get me wrong, she looked amazing. The few times that I did hear her sing, she sounds amazing. I hope it comes with a tour or something soon, but for now.
Yeah, but you also got to give her a lot of credit. When I was pregnant, I've been pregnant twice. I wouldn't be getting up on one of those things suspended all the way in the air, let alone performing in front of more than 100 million people. So,
and what a way to announce your pregnancy.
Oh
too.
my God,
I mean,
incredible.
It is iconic in that way.
Certainly is. All right, well, we have to leave it there. Coming up, we are counting down to the closing bell on Wall Street. The Dow off 95 points. We'll be right back.
Just a couple of minutes away from the closing bell. Let's get straight to Yahoo Finance's Jared Blickry to break down today's market action. What are we seeing?
Well, let's start with Boeing, and we have our defense heat map up here. It's up over 1% today. This is a 5-year chart where you can see the record high of a few years ago. That was before the MAX 37 debacle. But let me get to the reason here. This is soaring to the highest price in a year after reporting 35 deliveries of 737 MAX planes in January. Airplane manufacturers guiding for 400 to 450 deliveries of the 737 this year, or 35 per month. Also generating some excitement today, Air India. They reached an agreement with Boeing to purchase 190 Boeing 737 MAXs, 20 787s, and 10 777Xs. Now, overages could send the total to 290 with a $46 billion price tag. Of the move, Bloomberg Intelligence is saying the order is important as Air India is one of the world's fastest growing markets, or in one of the world's fastest growing markets, but splitting the orders with Airbus, which they did, that could limit profits and margins and sales. So as it extends competition for follow-on orders, we'll have to keep track of that. Now, let's get to crypto as well. This has been an interesting day. I was watching the CPI report earlier this morning, and let me show you what Bitcoin did. And on an intraday basis, you can see it's ending the day much higher. Here's a line chart for you after dipping on the report. Now, futures in the S&P 500 were much lower, and they're actually ending the day much lower than this. So as much as I've been saying watch Bitcoin as a leading indicator on the Fed, I still maintain that, looking a little bit bullish now. So let's get to the sector action with just a few seconds to go. We got consumer discretionary in the lead. That's up over 1%, followed by tech, materials, energy, and communication services. Here's the bell.
Stocks ending the day mixed. Nasdaq holding on to gains. Dow and S&P, though, ending to the downside. You're looking at the Dow off 156 points. We have some breaking news out of Washington. Jennifer Schonberger standing by with the latest on that. Hey, Jen.
Shauna, President Biden has named Vice Chair of the Federal Reserve, Lael Brainard, to be his next director for the National Economic Council. She will replace Brian Deese, who is stepping down this month. President Biden also announced that he will nominate longtime advisor Jared Bernstein to be the next chair of the Council of Economic Advisors, replacing Cecilia Rouse, who is stepping down. Brainard will be the second female director of the NEC after Laura Taylor, who served under President Bill Clinton. She takes the helm as the U.S. economy faces high inflation, rising interest rates, and slowing growth. Brainard will be responsible for advising the president on economic policy and continuing to oversee the implementation of Biden's key economic legislative packages, including that Infrastructure Act and the Semiconductors Act. She will also be overseeing the war in Ukraine and the U.S. response to that as it relates to the economy, and helping to guide the president in talks with House Republicans over raising the nation's borrowing limit. President Biden saying in a statement, quote, Lael, one of the country's leading macroeconomists, brings an extraordinary depth of domestic and international economic expertise. Brainard is a Harvard-trained economist who is leaving her role as the vice chair of the Federal Reserve, where she has served there since 2014 after being appointed by President Obama. Last year, President Biden nominated her to serve in that second-in-command role after Fed Chair Jay Powell. That, of course, her departure, leaving an opening at the Federal Reserve, causing some conjecture on who could replace her. Guys.
Yeah, exactly. And what this means for Fed policy here going forward, because we know that she has kind of emerged as this voice of reason in recent weeks, just in terms of cautioning the Fed against being too aggressive. Jen Schonberger, great stuff. Thanks so much. Well, let's take a look at some of the top stories of the day. First, Meta. Shares of the company closing just barely in positive territory. Some news out, though, from The Verge. The Verge reporting that Instagram will eliminate its live shopping arm in March. This comes as other companies like Amazon and TikTok have made a recent push into this space. Dave, we talked time and time again about how e-commerce shopping could be critical here to some of these larger players within the social media space. Meta's, though, new word is all about efficiency, and clearly they don't see the investment in that part of their business really paying off.
Yeah, you mentioned TikTok and Amazon. It's not just them. Walmart, Shopify, YouTube, all in on this live online streaming shopping opportunity. But it is a tale of two countries, largely speaking, where we sit right now. The opportunity seems massive if you base it on what's happening in China. In China, this really got going around 2016 with WeChat and Alibaba, and estimates are it was north of a $400 billion business in 2022 as it has continued to explode even out of the pandemic in China. But a tale of two countries back here in the United States. Despite all those large players in the industry, it has not really taken off out of COVID. It was strong when we were sitting home, and we've talked about that story for so many companies. When we sat around, when we were locked in our homes, people were doing it, and now it's only around 5% of the total e-commerce story, so it's not entirely clear if it will ever catch on in China the way it is here. But again, how do you argue when Shopify, YouTube, Walmart, Amazon, and TikTok are all in?
And especially when you start to see some of those engagement numbers, we know from some of the influencers who actually use Amazon, use this e-commerce space, clearly it has become a hit amongst their followers. They come to expect it. Those conversion rates are very attractive for some of those larger social media names. But I think this is just Instagram, Facebook. They need to make cuts. They need to be strategic given the performance of their stock last year. And this category, at least for now, seems to be the perfect one to cut.
We mentioned the big companies. You and I got to get in on this.
We do.
The commissions are around 10% for most products and 20% for other products. People are making hundreds of thousands of dollars a year, some north of $600,000 and $700,000, just hosting shopping shows.
Yeah.
Let me in on that. All right, for more on the markets, let's go to Morgan Stanley Investment Management, co-CIO of Global Balanced Funds, Jim Caron. Jim, good to see you, sir. Let's start with what we saw from inflation, the print this morning. What's your big picture takeaway from the numbers?
So thank you, and thanks for having me on your show. Look, I think the big picture takeaway is that there was something in this number for everyone. But I think where the markets ultimately settled on this whole thing was that inflation is coming down, but it's not coming down fast enough. And this raises questions of whether or not the Fed needs to continue to stay tight. Now, look, the markets are pricing in at this point that the Fed's going to 5.25%. They've even taken out most of the rate cuts that were priced in for this year, with maybe one rate cut towards the end of the year, not even. So, look, I would say that the big takeaway here is that given that there's been such a big shift in Fed narrative and Fed expectations, that the risk markets, equity markets, and everything else has actually taken it kind of in stride, which is maybe emblematic of the fact that the economy might be a little stronger or hotter than what some people were thinking previously.
Yeah, it's really interesting, isn't it, Jim? I mean, I've said it earlier, it's kind of an economic Rorschach test because it's just what you want to see it. Some see a bat and others see a butterfly in these numbers. What do you make of the market reaction, or rather lack thereof, today?
Yeah, so I think it's actually more or less constructive. The fact that we got a number today that I think most people would agree probably disappointed, meaning that inflation didn't come down enough. Inflation didn't come down to where it needed to go to. So, with that in mind, and, certainly 10-year Treasury yields, 2-year Treasury yields, all bond yields are rising. And you would think that with this kind of a move in the market in terms of interest rates rising, that equities would suffer a bit more. And the fact of the matter is that they did go down maybe a little bit, but I don't think it's anything dramatic. So I think equity investors are taking this in stride. They're looking at potentially the cuts to earnings or the weakness in earnings as something that they're willing to look through and think of it more as a correction. Because look, at the end of the day, what's really happening here is that we're shifting the narrative from hard landing to soft landing to potentially no landing. And as we make that transition, this is actually a positive for equity prices and for everything else, because people just aren't positioned that way.
Okay, Jim Caron, got to leave it there. Have some breaking news coming down. It is an interesting day to read the market reaction. Thank you, sir. Got some breaking news from Shauna.
Yeah, let's take a look at Airbnb getting earnings here from this company. Shares moving to the upside after hours. Look at that, a move of nearly 9% in extended trading. A lot of that has to do with the Q1 revenue guidance. That coming in better than expected. Airbnb sees Q1 sales for the current quarter here 1.75 billion to 1.8 billion. Estimate on the street was for 1.68 billion. So strong guide there for Q1 sales. In terms of what we saw for its latest quarter, revenue coming in slightly better than expected, 1.9 billion. Estimate was for 1.86 billion. Gross booking value coming in at 13.5 billion. Estimate there was for 13.58 billion. Nights and experiences booked coming in a bit light, 88.2 million. Estimate on the street was for 90.1 million. The company is saying that it ended the year with 6.6 million global active listings. Also some commentary here in this earnings release on future hiring plans. Airbnb saying that it expects to continue hiring at a, quote, judicious pace in the current year in 2023. But again, that guidance here, the Q1 guidance for revenue, a big reason why we're seeing the stock move higher, up just about 9%. All right, well, coming up next, Airbnb not the only travel stock reporting numbers. Find out what TripAdvisor's numbers look like when we come back.
January's CPI report is giving consumers an inside look at where prices remain high. Brooke DePalma is here to break down what type of groceries may still give you sticker shock, or rather maybe a stomach ache. It is just ugly out there.
I know, the feeling of seeing those numbers at the store just make your stomach upset for sure, but hopefully some hope here. Cereal and bakery products up 1.2% month over month, that is, as well as, well, if we're taking a closer look here, year over year, let's go with that. Cereal alone up 15%, of course, higher price of other ingredients, as well as elevated costs of labor and fuel costs. Eggs continuing to drive that category higher, up more than 70%. Dairy, as you can see, they're up 14%. Fruits and vegetables brought higher by frozen vegetables, up 18.6%. Carbonated drinks driving that last category higher. Carbonated drinks alone were up 14.3%. But let's take a look at month over month. So, of course, that's December 2022 compared to January of 2023. Cookies leading the way of the cereal and bakery products. Cookies alone up 2.5%. Ham and eggs, both leading meat, poultry, fish, and eggs category higher. Eggs, of course, still higher, up 8.5%, largely due to the avian flu outbreak. Fruits and vegetables up 0.5% there. Of course, citrus fruits is something we're watching closely as we saw lower production in Florida, which was caused by a freeze last January, damage from Hurricane Ian, as well as disease known as citrus greening. But overall, on an unadjusted basis, food at home going up 0.8% in January, up still 11.3% from a year ago.
And largely this is what explains why people are so discontent with the economy, despite what the jobs numbers show. And boy, orange juice is a problem.
Right.
The price of groceries continues to outpace the cost to dine out. What's the impact on restaurants and mega fast food chains?
Yeah, well, when you think about the restaurants overall, they've been faced with higher commodity prices, higher wage prices. And when you take a look on a yearly base, rather on a monthly basis of food at home and food away from home, that food away from home continues to increase at a lower rate compared to food at home. So consumers thinking that they could dine out and perhaps get a deal here. But most importantly, consumers are looking for value at fast food chains. And we're hearing across the board from C-suite executives on their earnings calls. For example, Yum Brands CEO David Gibbs saying, quote, higher income customers are coming more frequently. We're not seeing the low income consumer drop out of our business. What we are seeing is that they're probably a little bit more focused on value. So CEO Gibbs later on saying that we're winning because of value. Dave, we have the Taco Bell Cravings menu. We have a $2 burrito. KFC also coming out with wraps, 2 for $5 deal there. McDonald's saying a similar message here. Their CEO, Chris Kamczynski, saying on their Q4 2022 call, we need to balance passing through our pricing on our menus while maintaining our strong position on value with customers. Now, they said later on in the call they were seeing a bit of a trade down, but not nearly as much as they expected in Europe and the U.S. compared to 6 months or a year ago. Chipotle there has a typical higher end income audience there, and they're saying that the purchase frequency has actually gone up, but they did note a challenging macro environment that they saw this last quarter.
They saw those that make $100,000 start to trade down, but those that make 75 and less started to eat less Chipotle. Yeah, so it really is a
balancing act here.
Yeah, and McDonald's though, they have to have a lot of pricing power at the moment. Brooke, thank you.
Value.
Great stuff. Some more breaking news now from Shauna.
Yeah, take a look at TripAdvisor shares. You're looking at gains of just about 5% for its most recent quarter here. The company beating on both the top and bottom lines. Revenue, $354 million. The estimate in the street was for $343.7 billion. That's a jump of 47% year over year. Adjusted EPS of 16 cents. That's also a beat there in terms of what the street was expecting. 16 cents. The estimate was for just 4 cents. So a solid beat there for adjusted EPS. Also, TripAdvisor, their stock-based compensation for the quarter coming in at $23 million. That was essentially in line with expectations. The estimate on the street was for $22.9 million. But again, a beat on both the top and bottom line here, Dave. And really, we can gather from these results from TripAdvisor and what we just heard from Airbnb. Clearly, there is strong demand out there for travel.
Yeah, I'm going to go back to what we actually heard this morning to explain both of these two, and that's from Marriott CEO Tony Capuano, who said demand for leisure travel topped pre-pandemic levels. And the number that really astounded me here from Tony was that business travel is near 90% recovered from pre-pandemic levels. Most thought we were around 60 or 70% pre-pandemic levels when it comes to business travel. If we're back at 90%, you're looking at stocks across the board, anywhere touching travel, showing just enormous appetite and no loss of demand from the consumer. Look at the cruise stocks. Everything has consistently been popping the last couple of weeks, with the exception of what? Expedia might be the only one I can think of in the entire industry. everyone's showing just that huge appetite to travel.
Yeah, and Expedia blaming the bad weather that we saw in the fourth quarter. A lot of it had to do with the winter storm, also hurricane there, that is the reason why their results were affected. But in terms of their guidance, they were even pretty optimistic about what they're seeing in the current quarter. Very similar to what we heard from Airbnb. Airbnb again out with results here just a few minutes ago. Their outlook for their first quarter, that beat the street's expectations, really showing that travel demand is strong after what was a very solid year of growth for the company. You're looking at gains of nearly 12% after hours. For more on this, we want to bring in Tom White, Davidson Senior Research Analyst. Tom, it's great to see you here. So first, just your reaction to the numbers that we're getting from Airbnb.
Yeah, look, they look pretty solid. Looks like a pretty clean quarter, as you remarked. A little bit of upside on revenue and EBITDA in the fourth quarter. And the revenue guidance for the first quarter is particularly strong. The low end of the range that they're guiding to is actually above where the street is. So, it sounds like some of the commentary we heard from Expedia around a really nice kind of snap back in travel in January. Is kind of extending here to Airbnb, and also the guidance on EBITDA for the quarter was above the street too. And I think the other main takeaway too is, they made some comments in the letter about margins for calendar 2023, basically being in line with 2022 levels. I think some investors worry that, as kind of the economy reopens, people start going back into physical offices and doing, corporate travel, that operating expenses might tick up for some of these companies. But it sounds like Airbnb is going to be able to hold margins steady.
Just an insatiable appetite to travel, Tom. Is there any concern, and let's stay with Airbnb before we move over to Trip, 88.2 million nights. The estimate was for 90 million. And the other one that jumps out, and maybe it's just me, 900,000 more listings on Airbnb at the end of 22 than they had at the beginning. At some point, is there just oversaturation?
Yeah, look, so on room nights, maybe a little bit light versus consensus, but still growing room nights, significantly at a faster clip than some of the big other kind of more traditional online travel brands. We think that just reflects the fact that, Airbnb was able to use the pandemic as just this great opportunity to acquire a whole new cohort of customers that had never used the platform before. Those people we think will be sticky customers over the long term. And then secondarily, just vacation rentals in general continues to be the best performing kind of pocket of the market. Airbnb's got the most geographically diverse inventory, hits all of the use cases, including some new ones that some of the other traditional OTAs maybe struggle to participate in, like work from anywhere or these long-term stays, right? 20% of Airbnb's room nights are for something like 28 days or more. Still very strong growth, even if it fell maybe a smidge short of consensus. On hosts, I think there's a tailwind here from kind of what's happening in the broader macro, right? You've got mounting kind of inflationary pressure and then some macro pressures. We think that's going to be a tailwind for supply. It'll be interesting to see how Airbnb balances that big spike in supply and make sure that there's enough demand to satisfy all of those new hosts. But that's something that we'll have to keep an eye on for this year.
Tom, lots of talk just about the economic conditions, the risk that might bring here for Airbnb. Any indication, and it doesn't look like from these numbers just at first glance, that consumers are trading down, that they're opting for some of those cheaper options given the current economic climate?
Yeah, so far, so good. If inflation kind of remains, persistently high, that won't last forever. But at least so far, it doesn't seem to be eating into the underlying desire for folks to travel. We've seen a lot of the data out there around services related spending by consumers being a lot stronger than spending on goods. We think that bodes well for all of these travel guys. I'd also keep in mind too that, the vacation rental space, generally speaking, even though rates and ADRs have kind of gone up in this category, like traditional hotels, we still think this is a significantly kind of cheaper option when compared to kind of a comparable kind of traditional hotel stay. So it's not exactly value, given the fact that ADRs have kind of gone up so much over the last couple of years, but still represents, I think, a really strong value when people are evaluating travel.
Okay, quickly want to get your take on Trip, the numbers they're reporting. Their stock also popping as well. Investors like what they see. How much is Viator, which has really been leading the way for them, and what did you see here that stood out?
Yeah, so still kind of going through the press release there, but yeah, obviously the the headline kind of revenue beat was solid, and same on the bottom line. That sort of changes a little bit of kind of the MO for these guys over the last few quarters. Last few quarters, TripAdvisor's been outperforming on EBITDA and doing really well at cutting costs and staying disciplined, but the revenues have kind of underwhelmed a little bit. Nice to see them beat expectations on revenue. We think Viator is continues to be a really strong contributor. We also just think that kind of nice, robust recovery in travel is just kind of a rising tide that's lifting a lot of boats here. And with TripAdvisor, they also guided to basically flat kind of margins year over year in calendar 23. I think the institutional investor community is responding positively to that.
All right, Tom White, D.A. Davidson, good stuff. Thank you, sir.
Thank you.
Be sure to stick around tonight around 5:30 Eastern Time as Brian Sozzi and Brad Smith will recap Airbnb's earnings call and breaking down everything you need to know and what they hear from CEO Brian Chesky. Always an interesting, compelling speak. Coming up, love is on the minds of many Americans today. So what does that mean for popular dating apps like Bumble? Stay tuned to find out.
Love is in the air on this Valentine's Day, but what about on your phone? Pew Research saying that 53%, over half of 18 to 29-year-olds have used a dating site or a dating app. That's up from 48% in 2019. So let's talk about the state of dating apps right now. For that, we want to bring in Yahoo Finance's Ali Garfunkel. Ali, a lot of times it's debated whether or not these stocks are recession-proof. What do you think?
So they definitely have proven to be pandemic proof, Shauna. One of the things that we've seen is from that data from Pew, actually these apps are proving to be pretty resilient in the aftermath of the pandemic. People started dating on them during the pandemic and they've held on. And I think it's worth running through kind of the world of companies that we're dealing with here. Now, it's important to say There is a 900-pound, 800-pound, 1,000-pound gorilla in the room, and that is Match. Match has a number of brands that we're all going to be familiar with. The most famous of them, of course, is Tinder. Now, Tinder is something that we've come to associate with dating apps, but it actually hasn't had the easiest time. Tinder last year actually drove the company's first ever quarterly loss. So one of the things about Tinder right now is there's a turnaround story they're looking for. They need to make the app more inclusive for women, Gen Z, and really get monetization right. Tinder's revenue last quarter per payer actually declined 2%. So Tinder, despite the fact that that's what we associate with, isn't proving to be the most resilient. Now, you have Bumble on the other hand, which is the female-friendly one. We've all seen the ads. And it's important to say that the important thing about Bumble, you're having a thought, Dave.
No, I'm learning a lot. That's all.
Well, but the important
I don't know what any of these things are. So
the Bumble is the little B, right? And the thing about Bumble, though, is their download share is really important. They need to get it right in Western Europe, and they need to get it right really across the board because they are much smaller, and they're forced to be competing with, say, apps. See, Bumble, that's what it looks like. And the last one that's worth mentioning is Hello Group. They have Tantan, which is called the Tinder of China, which has also had some Tinder-like problems. At the end of 2021, they actually saw their revenue plunge 40%. So it's actually, despite the fact that this is kind of a sexy, fun space, it hasn't proven to be the easiest one to manage.
To invest in either, apparently. No, I just never got to do online
left
dating.
If you don't like it, swipe right if you like
Those
them.
are the important facts.
You gotta know.
I'm old. I've been married 20 years, man. I kind of missed out on that. It's an interesting space because success, you want people on your platform, but if you're successful, you want them right back off. So what does it look like long term?
Yeah, it's a really interesting problem, Dave, because if it's successful, people leave. However, the thing I think is really important to remember is for them, long-term, the name of the game is users. One of the things I saw in all these earnings reports, all the analyst notes, they talk about new user acquisition. How do they find more users? It's also about nascent markets, right? Market expansion. You know, Bumble, for instance, has to get better at localizing and going international, whereas you'd have something like Hinge, for example, that has to expand internationally. Like, for instance, Bumble, I think a couple of them are eyeing India as a key market. So I think what we're going to see over time is that these apps are going to try to expand and localize for certain people, for certain communities, for certain countries. And that's probably where the future is, because presumably, if it's working, people leave.
Yeah, you got to go to your niche, right? Like there's a farmer one and all. Yeah.
There's even a dating show coming out called Farmer Wants a
saw
Wife.
that.
Yes.
There we go.
They should have gone Cowboy Alley. They should have gone Yellowstone.
Capitalize on the Yellowstone.
New business idea, dating app, Yellowstone themed.
There we go.
Done.
Probably not too far off,
$1 billion
guys.
business.
So
You're
it's
welcome.
probably
It might
already in
exist.
the works. Yeah,
It
exactly.
might exist.
Allie Garfinkel, that was fun. Thanks so much. Well, coming up next, Nikki Haley is making it official. She's throwing her hat into the ring for the 2024 presidential race, but getting into the White House is not going to be easy. We'll take a look at what it will take for her to snag that Republican nomination next.
Some people look at America and see vulnerability. The socialist left sees an opportunity to rewrite history. China and Russia are on the march. They all think we can be bullied, kicked around. You should know this about me. I don't put up with bullies. And when you kick back, it hurts them more if you're wearing heels. I'm Nikki Haley, and I'm running for president.
There you go, Nikki Haley announcing her presidential bid. She becomes the first major challenger to former President Donald Trump for the 24 Republican nomination. Senior columnist Rick Newman joins us now. Rick, let's get right to it. What are the chances she can take on Trump?
Girl power there. She's going to kick you with her heels. I don't want to feel that. I think she starts with a branding problem, honestly. And it goes like this. Before Trump, she was considered a dynamic, pragmatic conservative. She was governor of South Carolina. She's the daughter of immigrants, and she's well known for taking the Confederate flag off the South Carolina Capitol. So far, so good. That gives her crossover appeal. But in 2016, she denounced Trump. Then she reversed herself and embraced Trump. She became part of the administration. She was his UN ambassador for 2 years. So now she's gone from saying this guy should never be president to jumping on the bandwagon. And now she's trying to distance herself from Trump. And the problem is she doesn't have a party. So how is she going to run inside the Republican Party? She's not. She started out as a never Trumper, then she went to Trump, and now she's moving away from Trump. So
Trump,
did the
Trump
entire
party. So did the entire party.
Well, so then she either needs to run as a Trumper, or she needs to completely disregard Trump and say, I reject him and I'm moving the party back. So I think she's stuck. I think she has no turf to stand on inside the Republican Party. I think if she could get nominated, I don't know. I mean, you have to have a lot of stamina and fundraising to get through a presidential election cycle. But if she could get nominated, she might have some centrist appeal. But I just don't see how she has a chance in the Republican Party.
Wow, woman of color, former governor, UN ambassador.
That's not what the Republicans
she's got
want.
a stellar resume, and I think she's going to thread the needle. Stick around. We're going to go Rick and Rick for more on where Nikki Haley stacks up in the race for the nomination. Rick Wilson, political strategist, and the Lincoln Project co-founder joins us. We're going to Rick roll you. Rick, apparently I am alone here, but the Lincoln Project tweets out the only candidate who could announce a presidential run on Valentine's Day and still get no love. Why is she getting no love, Rick?
Look, you guys exactly identified the wedge that she's in. She cannot say that Donald Trump was a bad president and that she will be someone who is better at the job than he is. She cannot make an attack on the MAGA base or an assault on the MAGA base if she ever says anything critical of Trump. The immune system of the Republican Party is wired so that even if they think that Trump should go, they still respond in this reflexive way anytime that someone criticizes him. And so she finds herself in the field where she's going to be a wannabe among all these other people. Look, I think she's probably going to end up coming in second or third place in her own home state at this point. Right now, the mojo is still with Donald Trump. People don't want to admit it. They don't want to think about it. They want to pretend it's not happening. But every poll out there is going to continue to grind this single fact in. Nikki Haley is going to be in the single digits in national polling. No one knows who she is. Every new candidate has to buy their way into the deal. The only person who's truly nationally known is Donald Trump. Even Ron DeSantis only has about 25% name ID nationally. These people have to crawl up a very high curve to get there, and she won't have the money. She won't have the predicate for her campaign. She won't have the time. And, for all the tough talk today, she didn't say, oh, I'm going to go after the one guy who defines and dominates the field.
Rick, let's jump ahead. Who do you see as, let's say, the three finalists in the Republican primary?
Donald Trump, and Donald Trump.
I mean, really?
Honestly,
I mean,
I think he's gonna do what he did in 2016. Look, all these candidates that are thinking of getting in, and Nikki Haley today, they're all relying on magical thinking. They all live in a fantasy world. They're like, she's thinking, well, DeSantis will soften him up, and then I'll sneak in and get DeSantis. It's the same sort of logic that Jeb Bush and Marco Rubio and Ted Cruz and Chris Christie all had in 2016. They all thought Trump would self-destruct or someone else would take him out. Then they would sneak in and become the nominee. It's magical thinking. I have a better chance of being the nominee than Nikki Haley. I mean, this is not the kind of race that lends itself to fantasy. Donald Trump is a protean force inside the Republican Party. Unless you are figuring out a way to dominate him, take him out, knock him down, kick his ass, you are not really a candidate. You are a passenger. And that's where Haley is right now.
I hate to break your heart, buddy, but you do not have a better chance than Nikki Haley to win this nomination. You do not have my vote. You're a big fan. I think
I have zero chance.
I think she can thread the needle here, but to your logic, I assume that eliminates Mike Pence, Mike Pompeo, and anyone who is aligned with Donald Trump and therefore gives only one man a realistic shot, which is Ron DeSantis, because he has not been inside the Trump administration.
I believe, though, that Ron DeSantis is actually more vulnerable in some ways than even a Nikki Haley. He is a guy who he's cosplaying this entire thing. He's faking the whole thing. Mm-hmm. And Trump has a certain feral sense of weakness in people, and he'll start tearing Ron apart, more vigorously than he's done so far, I think, in the near future. And while DeSantis is a strong candidate on paper, the National Review crowd loves him and the major donors love him. But those are the same people that in 2016 thought that there was no way that Donald Trump could beat Jeb and Marco. They were fabulous Florida conservatives who could appeal to Hispanics, and they could stick to their principles with a smile on their face and all these other predicates. It was all wrong. And the reality of this is that Trump transformed the Republican Party into his personal asset. It's his cult. These are his people. They're not going to go away easily. And Ron DeSantis right now isn't the second best Republican. He's the leading anti-Trump candidate. And we know how the Republican base responds to the anti-Trump candidate.
Rick, for our audience here, the anti-woke agenda that DeSantis and some others are now talking a lot about, especially with regard to businesses, is this getting any real traction outside that hardcore MAGA base? Would this have any mainstream appeal in a presidential election?
I just saw some survey data that we're coming out with shortly, and it's still preliminary. But the woke attack works on about 6 to 8% of the American population. Huh. It is hardcore, super MAGAs, and basically the people who respond best to the woke stuff are committed Trump voters. They're not going to break off of Trump to go to DeSantis. Why do you want Diet Trump? They're going to stick with that. And it is an esoteric and narrow little linguistic fillip that he's playing in, and no one really cares about it outside of this very narrow window. Woke, the whole woke thing isn't popular with regular voters once they think about it, but it's not the decisive factor in a campaign. The numbers just aren't there, and in a Republican primary, it may be necessary for him to play that role, but it's not sufficient.
I agree with you on Diet Trump, but I still think Zero Sugar Trump has a shot here. The one thing America has said is we don't want Biden v. Trump, and that looks like what we may be getting. Rick Wilson, Rick Newman, been a pleasure. Thank you both.
Anytime. Thanks for having me.
All right, coming up, nothing can get in the way of true love except some financial red flags. Find out what daters should be on the lookout for next.
It's Valentine's Day, so it's the perfect time to take a look at love and money. 46% of U.S. singles are actively dating and looking for a partner. That's according to a Wells Fargo survey. While love, though, might be in the air for some of those singles, our next guest has some financial warnings for them. Joining us now, we want to bring in Emily Irwin, Wells Fargo's Wealth and Investment Management Managing Director for Advice and Planning. Emily, it's great to see you here. So we have lots to unpack, lots to get into on this Valentine's Day. You are advising people looking for love to consider 4 financial red flags. Let's start with the first, and that's financial secrecy. We put this question out to our viewers. We asked them if they had ever hid a financial secret from their partner. About half, 48%, saying that they have done this in the past. A red flag, clearly some risks here.
Absolutely. Well, and you think about the foundation of every relationship, whether it's platonic or romantic, is honesty. So when we see survey results like that, it's concerning. And we want to make sure that financial secrecy is all about that unwillingness of one partner to openly discuss finances, including expenses, income, and even debt with their partner, because this can lead to deeper issues that might be percolating under the surface in other aspects of their life.
Boy, that is a huge number. I would say most people I know do have a financial secret from their spouse, but that comes on both sides. The second red flag is flaunting wealth. What do you mean by this, and why is it so big a problem?
Yeah, so flaunting wealth is either the overspending or what I call the public display of money instead of the public display of affection, since we're on Valentine's Day. And really, this could be rooted in a number of different things. It could be rooted in insecurity. It could demonstrate a risk tolerance that is more aggressive than you're comfortable with, or it may even cause pressure on you in the relationship to go above and beyond your own comfortable boundaries with respect to your own finances to match your partner in this type of over display of wealth.
Emily, in a survey from Fidelity back in 2021, they've actually found that 20% of couples identified money as the biggest relationship challenge. Your third red flag is job instability or lack of career goals. That certainly would lead to some fights, you would think, about money. What do people need to know? What do people need to consider if they're thinking that, hey, this might already be a red flag for me?
Definitely. So this is where listening and learning from your partner is really important. Ask the questions about what do you have for goals, not just with respect to your career, but lifelong goals, which may include family, home ownership, independence. How does your partner prioritize how he or she spends his or her time and the money associated with those activities? With whom does he or she do it? And then finally, how does your partner support those needs financially? So that's the type of things all wrapped up in that career pathing. You want to make sure you're with someone who can match the career path that they want to have and the lifestyle they want to have, and match yours as well.
Yeah, openness and honesty, certainly the best rule there. Finally, we have unattractive frugality. What are we talking about here? How's this play out?
Oh my goodness, this makes me cringe when I think about unattractive frugality, and we've all probably watched it happen. It's when we are with someone where usually not overextending on a budget is a good thing, but this is when it crosses into maybe the dark side. And it's when we see our partner maybe under tip or not tip at all, those in the service industry. It does raise questions about, what are the value systems, and do your systems align if that's something important to you? It may also come up in the form of charitable giving. If you're someone who's very charitably inclined and wants to participate in financially supporting organizations, and you have someone who pulls back on that, you may find that your goals and your value systems are not aligned on that particular aspect of your life.
Yeah, can't marry a bad tipper. Wells Fargo also has a list of some common questions about financial management for new couples. The first is, should we join our accounts? How important is that and the conversation?
It's critical. So joining accounts was traditionally, of course, the way most couples manage their finances. Now that we have hybrid approaches, you could potentially consider a joint account in addition to separate accounts. This can very often minimize and diminish any fights associated, but it still means that you have to dig deeper. How are you going to fund those accounts? Are you going to share expenses 50-50? Are you going to do it pro rata to your income? Are you going to do it on a case-by-case basis, and maybe you'll take the mortgage or the rent and someone else is going to take all the utilities? So it's not just the structure, it's all about the why behind it and being comfortable with it.
Excellent Valentine's Day financial conversation with Emily Irwin. Really appreciate that. Thanks so much. All right, let's get over to Shauna with what's moving after hours. Were you very transparent in that early dating process regarding money?
Yes.
You got to get it.
Were you?
Got to put all the cards on the table.
You got to put it all out there because, as you know, when you get married, everything comes to light. So you got to be honest.
I bragged about how poor I was, not about how rich I was. I wanted her to know.
You got to invest for the long term, right? It's paying off now. All right, let's take a look at some of our after-hour movers here. We have 4 stocks for you to keep an eye on. Kicking it off with Airbnb. We're looking at gains of nearly 10% here in extended trading. A solid report here from the company as the demand for travel certainly looks like it's here to stay, at least for now. Taking a look at this quarter, they beat on both the top and bottom line. Also issued strong guidance for the current quarter right now in the shareholder letter. Airbnb writing that it sees strong demand in Q1 and the consumer is confident to travel. That confidence remains very high. Over the last 3 months, we're looking at gains of just about 14% year to date. The stock has certainly been off to a very strong start of the year. We're seeing that reflected in a number of these travel names since January 1st. You're looking at gains of just about 41%. TripAdvisor, another stock that has been off to the races since the start of the year. We're looking at a pop in after hours up just over 8% right now. Another strong beat from this company. And we're looking at a beat here on both the top and bottom lines. Revenue for its most recent quarter jumping 47% from just a year ago. Their Viator marketplace clearly has been a driver here in these recent results. That business helping to drive some of those stronger than expected numbers that we're getting from TripAdvisor, up nearly 40% since the start of the year. Over the last 3 months, though, a little bit of a longer term chart there, up nearly 17%. Kicking it over to Devon Energy, that stock under a bit of pressure here, off just about 5% in extended trading. The company's 2023 CapEx forecast missing the street's estimates. Free cash flow here in line with expectations at $1.1 billion. The company also, the board here, approving an 11% increase to its fixed quarterly dividend. Over the last 3 months, you're looking at losses of nearly 11%, but over the last year, that stock is clearly in the green, up just about 22%. And rounding it out here with GoDaddy, that stock off just over 1% here in after hours trading. Revenue just a bit light, $1.04 billion. The street was looking for $1.05 billion. EPS missed though. Full year 2023 revenue also coming in just a bit light. Over the last year, stock has been essentially flat, but taking a look at the last 3 months or so, you can still see that the company has been able to gain back some of that momentum with shares up just about 10%. All right, well, coming up next after the break, Cardi B and Offset are making today a Valentine's Day to remember at McDonald's. We'll tell you why next.
McDonald's has a Valentine's Day dinner available for any budget-conscious couples out there. The fast food giant is introducing its first celebrity duo meal with lifelong McDonald's fans Cardi B and Offset. Starting today, fans of the rappers can pick up the duo meals at restaurants across the country. Cardi B's part of the meal is a classic McDonald's cheeseburger, tangy barbecue sauce on the side, and a large Coke. Offset gets a quarter pounder with cheese and a large orange high C. I love that. And to share a large fries and an apple pie. All right, Shauna, what would be the Shauna Smith combo?
So my combo would be, I love their crispy chicken sandwich. They have a spicy crispy chicken sandwich. I'm going to go with that. A large fries. We're not splitting. It's going to be all to myself, and a Diet Coke. What would yours be? And barbecue sauce on the side
amazing.
For the fries.
My wife won't share with me either. Easily got to be the sausage McGriddle, egg and cheese. I know it's not available at dinner, but for Valentine's, you can do me a favor. Definitely go with some fries. And I need a Shamrock Shake, which is back in the store February 20th. Shamrock Shakes are underrated.
And it's incredible how smart and how successful McDonald's has been with these pairings, with these promotions. Time and time again, they have teamed up with a number of celebrities in the past, and a lot of their favorite meals sell out pretty quickly, and they're no longer able to offer those. We know Shamrock obviously is a milkshake that they offer every year around St. Patrick's Day. It's a huge hit. You don't want to look at how many calories are in this drink because you're going to think twice maybe about drinking it the next time, but they're so good. The limited releases, you can't argue with them.
Yeah, the Travis Scott meal, I think, was several
Mm-hmm.
months ago. That was a huge hit. This one actually threw me off because Offset I didn't know was a person. I thought it was a type of meal, an offset, like like a financial term. I'm still learning. I'm still coming around to pop culture. But I want to know who's going to McDonald's for Valentine's. That's the real question. Are you getting points for that?
I think you're getting points for that, and it's better than my plans. I have no plans for Valentine's Day. So McDonald's, I think it looks like a pretty good option.
I'm taking my wife there.
All right. Well, be sure to stick around tonight before maybe you head to dinner for Valentine's Day. Around 5:30 p.m. Eastern Time, Brian Sozzi, Brad Smith, they will be recapping Airbnb's earnings calls and breaking down everything you need to know. That does it for us today on Yahoo Finance Live. Thanks so much for tuning in. We'll see you right back here again tomorrow at 3 p.m. Eastern Time. We'll see you then. Have a good night.
When do we get
and
our
happy
cartoon?
Valentine's Day.
Oh yeah, happy Valentine's Day. When do we get our cartoon?
I know, we need that.
I thought we were getting one.